All right, starting the recording now. So Marquita, the ball is in your court.
Okay, thanks so much, Steve. Good afternoon, everyone. I'm Marquita Wiley with Innovative Business Advisors, and I'd like to welcome you to our weekly webinar. Today is a little different from last week. We're kind of back to the format that we had in the very beginning, so 6 weeks ago. We should expect a presentation, which is pretty much guidance update from Steve Denny relative to what we know about the various programs that are available to us as small businesses from both the SBA and the Treasury. With that said, I'm going to start very quickly with the logistical component of it, and that is from a logistics perspective, we are in the Zoom portal. As participants, we ask that if you have a question, you type your question into the Q&A box. So you should see a Q&A box. As I look at it right now on my screen, I can see that there is one question posed already in the Q&A box. So you may be able to see it on your screen. Type your question there. We will be answering the questions based on those questions entered into the Q&A box. In terms of logistics, I'm expecting today's meeting may be slightly shorter than the meeting we did last week and our previous weeks. We're simply presenting the update on the various programs that are available to you from Treasury and the SBA. Steve will be presenting that update, and then we will not bring a second speaker on. So we'll go directly into Q&A from that point. We are dedicated, or we're committed to a full hour. However, if the logistics of the meeting or the dynamic of the meeting is such that we end earlier, so be it. Okay, so we'll follow your lead in the Q&A session as to when we're finished. With that said, Steve, I'm going to turn the mic over to you.
Marquita, thank you very much. Appreciate very much your dedication to these Friday webinars and moderating this throughout the day. All right, folks, today we are focused on PPP. We're going to give a pretty comprehensive overview of everything that we know from the guidance that's available, the various discussions we've had with other trusted advisors and the SBA directly, and should have some good information for you on how to use your funds appropriately, and most importantly, how to ask for forgiveness for these funds, because that's a unique element of this particular program. So just to give you a quick overview of the information we're going to cover today, I'm going to start with a quick economic update. Then just to form a foundation for what we're going to talk about, I want to give the audience a little bit of information about small business in the United States of America. It is much bigger business than you might think. A quick overview on the SBA in action, and then we'll dive right into the Paycheck Protection Program and cover an overview of the program, updates from the most latest guidance, specific information about how to use the funds, specific information that we've got about how to go through the forgiveness process, and then some special counsel about accounting side of it. So with that, one of the things that IBA is really focused on is we want to make these webinars most important for you as a participant in the webinar. And we'd like to take just a moment and take a quick poll of our group and find out exactly what your thoughts are on future topics that we can actually bring to you. So what are the topics that are most important to you as a group? So Marquita, does the poll pop up on the screen?
Yeah.
Excellent. So for all of those
Yes.
participating, if you guys would take a minute or two, and you can select as many of the topics as you would like. If there is a particular topic that you would like to have us bring to you and you don't see it on the list attached, please put it into either the Q&A module or into the chat module, and we'll be certain to record your preference. So again, you know, our objective here is to bring information that's most important to you as the audience, and we hope We hope that you'll find the information today incredibly useful. And then we'll use your feedback from this short poll and help deliver and develop topics and presentations that we can bring to you in the future as well.
I don't see the topic of when are we going to get to see Cardinals baseball?
Good one.
The other topic, will there be college football in the fall?
You know, the world's going to come to an end if we don't have college football.
Oh, let me tell you. You know, I'm from Alabama, Steve. So
well, you know,
we live and die college football.
And you know they play in Denny Stadium, right?
Well, there you go.
Yeah. The one thing we can say about the Cardinals is it's the middle of May and they are undefeated.
That's a good one. I'm going to use that.
All right, excellent. We've let our poll run here for a couple of minutes. And I think I'll give it just another 15 seconds or so. If you haven't voted, we'd love for you to take the opportunity to do so and get that in. We've gotten good participation on our voting, it appears. All right, excellent. I am going to end the poll and we'll jump right into the presentation then. Okay. So I'd like to start by just, highlighting the fact, and I'm sure everybody's heard this week, another 3 million people had filed unemployment claims. So we're now at the point where about 36.5 million people are filing unemployment claims in the United States, unprecedented levels. And again, the good news is that the claim rate continues to fall. So hopefully as we begin to open up and people get back engaged, we'll see that trend reverse. So I wanted to take a couple of minutes. This was interesting research in preparation for this webinar. We went out and did a little bit of research about the facts surrounding USA small business. And frankly, we came up saying that basically USA is equivalent to small business. And I think you'll see that yourself. I'd also invite the participation or the participants in the audience here. If you want to learn more about this, you can go to usafacts.com. And there's an incredible amount of data about this. But in the USA, there are approximately 31 million small businesses. A small business is that's classified as having less than 500 employees. And the small businesses in the US represent 99.9% of all companies that are registered in the US. Small businesses also employ approximately 60 million people, which is roughly half of the US workforce, an amazing statistic. And this absolutely floored me. And this is the 2017 data. This is what $13.3 trillion of revenue looks like when you actually write it out longhand. And that's a little better than a third of the total business revenue that's experienced in the United States. So, when you think about small business, we don't hear about them on the news very often. We tend to hear about those that are listed on the various stock exchanges, but small business really is the engine of the United States. And then this comes directly from USA Facts as well. It was kind of an interesting graph. And what it shows is within each major industrial classification, the percentage of employees within that classification that work in small businesses. And about in the middle of the page there, you see the 50% line. So everything to the right of that, like professional services, accommodation and food services, other services, construction. Yeah, interesting. 83% of people in the construction industry as a whole work for small businesses. So just kind of an interesting geographic or actually representation of how small business is broken up in the marketplace. And then here is another way to look at it. Small business employment as a proportion of the overall employment. And this is broken down state by state. So the yellow states, small business employment is less than 46% of the employment within those states. And then as you go up the green bars, you can see the percentages grow accordingly. So amazing, amazing when you look at this, really gives you a sense of where the majority of the small business employees are throughout the state. So let me transition for a minute and talk to you a little bit about the SBA and try and put a little bit of context around this whole PPP program before we dive into some of the specifics of it. So the most recent data for SBA lending goes back to last year, 2019. And in 2019, the SBA did a total of $30.2 billion in loans, which was approximately 100,000 loans. And that's an average year for the SBA. 30 billion a year has been an average year for them. And just for everybody that's on this call, I'd like for you to be aware that, you know, the vast majority of SBA loans are what are called 7A SBA loans. And they represent approximately 80% of all the loans that the SBA provides. And to process a normal 7A loan within the SBA, a single loan, takes between 5 and 10 business days. Now, the SBA also has an express program, and their express program is a much smaller proportion of the loans that they do, but they do those in 3 business days. So keep that in mind. In the SBA's history, typically it takes them somewhere between 5 and 10 days to process a single loan, and over the course of a given year, they're doing about 30 billion in lending. Let's contrast that with what's going on under this PPP situation. So in round 1, there was $342 billion worth of loans that processed under round 1. And in round 2, through last Friday, the most recent data available, $189 billion in loans were generated. And how does that break out by the number of loans? 1.66 million loans in round 1. In round 2, as of the close of business last Friday, there were 2.57 million loans. So when you look at that in terms of days, round 1 actually went on for 14 days. We're actually into, 19 days of round 2 at this point in time, but the data we have is only through last Friday. So just put together a quick bar graph so you can get a sense of, an average year for the SBA is 2019. And then you look at what they've done in terms of PPP round 1 and 2, you can see what a difference that has made. When you do the math on it, over the course of the 26 days that we're illustrating here under the round 1 and round 2 PPP, that equates to 18 years of activity of the SBA. So it's really a absolutely Herculean effort that the SBA has put forth to deliver the loan programs that are necessary for the businesses in our country. And this is a Paycheck Protection Program loans per small business. So this is based on last Friday's data as well. You can see where the vast majority of the lending went. The lighter green and the bright green got more loans per 1,000 small businesses in their states than in the yellow areas. So this was really a surprise to me when I was looking at this. If you would have asked me beforehand, I would have thought, New York, Florida, California would have gotten the largest amount of loans per percentage of small business entities within their state. But in fact, it was the Midwest that really has led the trends for PPP lending. So some interesting facts that hopefully will provide some additional information for all of our participants today. So let's spend a couple of minutes and go through the Paycheck Protection Program just as a quick overview to remind everybody exactly what it's all about. And remember, the Paycheck Protection Program was aptly named because the intent of the law was that as an employer, if we could get, the federal government could get money into the hands of employers, the employers could much more quickly and easily pay their employees to keep them off of unemployment. And that was the original intent of the law. So they set this up so that it was lender originated, SBA guaranteed, and lender service, meaning that your banks or your financial institutions are the ones that are taking your applications. The SBA is guaranteeing the payment of those back to the lender, so the lender has no risk, but the lender does take your payments and is responsible for servicing the loans. What's very unique about this is it's a forgivable loan, but remember, at the core of this, it is a loan product. And it's a loan product that has got 1% simple interest rate. I'm 60 years old and never in my life have loan rates been this low. So I think it's an unprecedented program in that regard. There are also no prepayment penalties, no recourse, no loan fees, and your first 6 months of payments are deferred. So when you couple that with the fact that the Paycheck Protection Program loan is actually a 24-month term, your actual experience, you're looking at 30 months of repayment period over that particular loan. So I think if we were talking about this solely as a loan, forget the forgivable portion for a second. I don't know a single business owner alive today that could say they've ever had a product that was cheaper than what's available right now under this Paycheck Protection Program. So it's a pretty incredible loan program by itself. A couple of major updates have come out in the last week since we talked to you guys last Friday. The first major update is what's known as the safe harbor provision. So on Wednesday of this week, the Department of Treasury and the SBA came out and said that for all borrowers with a loan principal amount of less than $2 million, they are going to assume that you made all your certifications in good faith, and thus you are in what's known as the safe harbor. So you have no fear of being audited or any risk of somebody coming after you for misrepresentation on your loan. So that's kind of blanket immunity that they've given all borrowers of less than $2 million. In addition to that, they said for anybody that's taken a loan beyond $2 million for more than $2 million, and remember the maximum was $10 million, they've extended that safe harbor provision to those borrowers up until Monday, May 18th, if they did not make good faith certifications for that loan. So the borrower would have had to say we were economically disadvantaged by this COVID pandemic in order to be eligible for the loan. But if in fact that didn't happen and they were just taking it for other purposes, they've extended this, this safe time by which you could repay that loan without any risk of them coming after you. The other thing that the Department of Treasury and the SBA said was that for all loans in excess of $2 million, they are going to audit every single loan. So they will be taking a deep dive on all loans in that area. And then the other point of guidance that we got this week is to answer a question that we've heard many, many times, and I'm sure the SBA heard from many other people: is forgiveness reduced for laid off employees who won't return? And I'm going to give you the short answer. Short answer is no. The forgiveness is not going to be reduced if you've got employees that wouldn't come back to work, but you must have a written record of that. So, you must have an email or some written communication with them. If you tried to call back a laid off employee because of the fact you had the PPP funds and could now begin to pay them, and they refuse to come back to work, you just have to have a written record of that, and then that won't affect your forgiveness side of it. So those are the significant updates that we've received this week. Now let's talk a little bit more about the use of funds under the Paycheck Protection Program. We want to start with the date of the loan disbursement. So if you've received a Paycheck Protection Program loan, you actually receive the funds on a specific date. We are recommending that you draw a red circle around that date. Make sure that you pay close attention to that, because that date is the starting point for the 8-week measurement period moving forward. And if you're interested in having the loan forgiven, that 8-week period following the loan disbursement is the most important time, as the guidance is written today. So, again, you want to make sure you pay close attention to what day did you get the funds on, and then your forgiveness is going to be based on how you use the funds from that date forward into the next 8 weeks. And the primary mode of use that's allowed under this is to cover your payroll costs. And payroll costs, we're going to talk a little bit more about what's included in all your payroll costs, but it's important to note that payroll cost is on a gross basis. And gross means it's the total amount of the compensation, not the net amount that your employees receive, but the total amount of compensation that you as an employer are providing. And the use of your funds from the PPP should equate to 75% of those funds should be used for your payroll costs. So what is payroll costs? So first and foremost, it's the cash compensation that you pay somebody. Remember, there's a special limit out there for employees that are making $100,000 a year or more in cash compensation. So in effect, over the 8-week period of time, you can't pay any single employee more than $15,385 as part of your PPP usage. But it's not just the cash compensation you're paying your employees, it's also the benefit costs that the employer experiences for healthcare, for retirement, for insurance, for stipends, things like housing stipends, travel stipends, car allowance stipends, any other type of stipends. So it's the other expenses that the business incurs specifically related to its people. In addition to cash and benefits, it's also the vacation, parental leave, family leave, medical and sick leave time that you're providing for your employees as well. And all the federal, state, and local taxes on the employee side. Now, please note that you cannot claim the employer portion of your federal taxes. That's the only exclusion out of payroll costs. So it's not just the wage that you're paying your people, it's the wage plus all the benefits and leave and taxes that are associated with that.
Hey, Steve.
Yes, sir.
We had a specific question to that, so I want to make sure. I think you answered it, but that this person posted their question as anonymous. I don't think that there's their name. They're just saying they're not telling us. But anyway, their question was, you may answer this later in the presentation, but has the definition of payroll costs changed so that FICA and federal income tax withholdings are now forgivable?
So the FICA and the federal, the employer side of that is not included. So the employer side of that FICA and federal tax. So the employee side of it, yes, is a deductible portion of the payroll cost.
Okay, thanks.
Okay. All right. The other expenses that are covered as a forgivable use for the PPP funds is utilities. And keep in mind that you can't pay past due utilities. This is the current utility expense that you experience in the 8-week period of time. And you also can't pay, forward-looking payments on your utilities either. We've seen a lot of different companies providing different information about what constitute utilities. Does internet provider constitute utilities? Does cell phone constitute utilities? We're expecting to see some additional guidance in this, but as of right now, there is not, that we're aware of, any written guidance out there that will tell you exactly what is and what is not included under the utility side. All of your business rent and lease is covered, and all of the interest on your existing debt. Now, we had an earlier question about this, and I want to reemphasize this. This is a part of the law. So it's for the existing debt, so you can't go out and have new debt that is involved in that. But it is not only interest on any of your mortgage obligations that your business holds, but also interest on any other debt obligations that were incurred before the covered period. So just want to be clear on that as well. So now you know how you can use it. How do we get forgiven for it? I want to provide a couple of qualifiers before we dive into the forgiveness side. First and foremost, the following slides that we're sharing with you today is what we know to be true as of today. So this includes all the latest guidance and includes our discussion with multiple different entities to provide some information for us that we can share with you guys. Secondly, we fully expect that we're going to be receiving additional guidance and rules, that everybody's going to be receiving additional guidance and rules in the near future. As a matter of fact, we were just off immediately preceding this webinar. We were on a call with an SBA representative who confirmed for us that we should see additional guidance within the next few to several days as well. So we're looking forward to that. Keep in mind what we were telling you today. We're going to give you some very good information, which we know to be solid recommendations. But these things are prone to change, and we highly recommend you stay tuned every week for at least the next few to several weeks to make sure that you avail yourself of the most recent guidance. Our commitment to you as an audience is that we will continue to stay on top of this each week and have all the latest information. We'll summarize it for you and bring it to you on these webinars every Friday. Okay, so let's get into what we know so far. What we know so far is it's going to be a two-step process. So step one is to calculate what you spent in the 8 weeks following the loan disbursement date. So remember, that's the key date. And that will help determine what's the maximum amount of loan forgiveness. And again, the general guidance is that payroll costs should be 75% or more of the use of your funds, and everything else should be less than 25% of the funds that you use. So from that perspective, the second step is that there is currently some provisions where your forgiveness could trigger some reductions. And there are two ways that that could happen. One is if your headcount has been reduced. And this is one area where we think there's going to be a lot of additional guidance in the future. And you'll, I think, as an audience, understand that in just a second. So if you remember back to when you applied for the PPP, there is a specific eligibility formula. And that formula is exactly this. It's full-time employment plus part-time employment plus other employment equals the total number of employees in your company. So the problem comes into play is the forgiveness formula that's in the law says specifically full-time equivalent employees. So what is the difference between those two formulas? And that's what we believe we'll see some significant guidance on in the future. But remember, you know, if you had under your application for the loan, if you had, let's say, 30 employees written on your application, there was just an area for you to put one number, and you in your calculation added up what your full-time, your part-time, and your other employees were to come up with that total number of 30, and you may end up with only 15 people that are working for you full-time during this 8-week period of time. You know, it's up to you as the borrower to explain the difference to the lender as we move forward. And we're going to talk a little bit more about that in a second. The second way that your forgiveness could potentially be reduced is if you cut the wages of any of your employees by 25% or more. And what the current regulations say is they're comparing your 8-week period of time per employee based on the last full quarter before that covered period. So it wasn't necessarily the last year's application where you took your last year's payroll and divided it by 12 and multiplied it by 2.5 in order to get your funding. You're comparing the covered period, that 8-week covered period, with the previous quarter. So be mindful of that. That's a little bit different. Yes, sir.
I know we answer questions at the end, but we really got some specific questions to this as we go. So I think it's relevant to answer them now. Is that okay?
Absolutely. Absolutely.
So here's a question. Another, I read somewhere that if payroll costs reported under the forgiveness are more than 25% higher for the last 2 months of payroll cycles leading up to the crisis, that difference is excluded, quote, not forgivable. I'm assuming this is to prevent people from prepaying employees or vacation time to use the funds. I don't think we've heard anything about that, have we?
We haven't seen anything in the government guidance or FAQs that specifically relates to that. But hold that thought a minute, because I think when we get into the next slide, we'll have some meaningful information for that particular question.
Okay, one more.
Sure.
We had a gentleman say, can you go back one slide, please? And don't know where we was at when we seen that. So just, if you can be more specific, we'll answer your question. Another question was, in your slide is other contract worker. I'm assuming she says contract. I'm assuming she means contract workers, and those are not forgivable under the PPP. They need to do their own.
Yeah, that's correct. And I think, you know, the questions that we have as a firm have fielded from our clients and the people we've been engaged with, you know, many times people have said, what about contract workers? Because a lot of companies do have contract workers. And I think that perhaps a business owner, when they made their application, may have been thinking in terms of contract workers and didn't fully understand that they couldn't claim contract workers under the PPP use until they dug into it further. So that could be one level of explanation that you want to use as you go to apply for forgiveness. And we're going to talk about applying for forgiveness in just a minute. And then one other comment just before I move on, the gentleman that asked us to go back in the slides, please remember that we post this replay on our YouTube channel every week, and all of the slides are available on with the replay. So you can get the slides and any supporting material that is provided during this webinar right off of our YouTube channel as well. So it'll be there for you in the next day or so. Okay. Any other questions?
Nope, good.
All right. So let's talk a little bit about forgiveness. So remember that when you applied for your PPP, you had to self-certify your eligibility. Well, exactly the same thing happens when you go to apply for forgiveness. As a borrower, you're going to self-certify the information that you provide for the lender. And it's the lender that is actually going to be evaluating your information for forgiveness. So this is not necessarily coming from the guidance. This is coming from our reading of all of the guidance and FAQ information that's out there and our discussions with lots of other professionals in the field. But here's what IBA is recommending right now. First off, plan to provide your lender with a detailed narrative report with attachments. So what do I mean by that? Basically, write a letter or an executive summary describing exactly when you took the PPP funds, what your date of disbursement was, and then over the course of the next 8 weeks, have a little diary of how you spent that money and where it went to. So you've got a detailed narrative report that when you apply back to your lender, you can hand them this report with the attachments and say, here's my justification for the forgiveness. Now, the lender is not charged with going out and, you know, playing Professor Clouseau here and trying to verify all of your information. All they've got to do is go through your report and make sure that it's rational and reasonable and that it adds up correctly. And then turn around and apply back to the SBA with the appropriate documentation, including a copy of your report that says, here's what we're granting in terms of forgiveness on this particular loan. So what attachments are we recommending? We're recommending that for payroll, you should use your payroll tax filing reports, because if you're providing this information to other forms of government, you know, you're certifying the use of your funds in just about every possible way you can. So from a federal perspective, that means submitting Form 941. And then in each state that you're in, you know, you'll have state filings for employment taxes and use the copies of those as well. If you've written checks for your utilities or your any of your interest payments or your rent or lease, I would include copies of those canceled checks. If you've used credit cards to pay those bills, you might want to include copies of your credit card statements highlighting those specific things. But remember, on interest, if you're making a payment, a debt payment, let's say you're paying part of your equity line, or let's say you're paying part of your line of credit, or let's say you're paying part of your business credit card, you should make 2 payments during that 8-week period of time, one to cover the principal and one to cover the interest, so that you can clearly record that I've paid the interest on this loan, you know, as part of that forgivable expense. So have very good documentation. And it's up to, again, it's up to the borrower to self-certify to the lender that they use the funds appropriately. And if you do that with a detailed report with some backup of exactly what your spending is, we believe you're going to have a very high probability of success in getting the forgiveness. You should also be aware that the lender's decision is due back to you within 60 days of your formal application for forgiveness. Now, it's in the lender's best interest to provide you with a decision much quicker than that. But the law currently provides them a window of 60 days to evaluate your application for forgiveness and their decision of that. So be aware of that. But if you think about, you got the funds on day one, you used them for 8 weeks. Let's say it took you another week to put together your narrative report and your attachments, and then the lender took 60 days, you're still well within that 6 months of deferred payment side. So hasn't cost you anything, but it's certainly, for borrowers, it's in your best interest to apply for forgiveness as quickly as possible after the 8-week period of time. And then it will take a little bit of a period of time for the lender to come back and grant you that and tell you exactly what you're forgiven for. And that's the final piece of this. Any amount that you're not forgiven becomes part of that remaining loan balance. So remember, this is a loan, and at that point in time, the remaining loan balance is one that you'll begin to make payments on basically 7 months after you've received the loan. Okay. Any questions on these slides, Terry?
Nope, we're good.
All right, very good. So that covers the forgiveness part of it, and hopefully gives you some practical ways that you can begin to keep track of how you've used your money and prepare to apply for forgiveness. We also want to just touch on the IRS has come out with Notice 2020-32, which really refers to how you provide your tax returns for the year 2020. And there's going to be a difference this year. So your bookkeeping and your tax reporting are going to be different. So keep in mind, I'm not talking about your monthly or your quarterly reports. I'm talking about your annual tax return. Excuse me. So your bookkeeping would be traditional, just as you would normally do your bookkeeping for your business every day, but your tax return is going to be different. Your PPP loan amount is not reported as taxable income. So if you think about that for a minute, you never report a loan income as taxable income. Typically, your loan is going to hit your balance sheet. It's never going to hit your income statement, and it's never going to hit your tax return. However, the forgivable expenses, so whatever expenses have been forgiven by the lender, you also cannot report those forgiven expenses as part of your expenses on your tax return. So those forgiven expenses are not reported as tax deductible expenses. So that's where the big difference comes in. Your accounting and your bookkeeping reports and your operating reports may stay the same, but your tax return is going to be a little bit different. And then finally, we just want to emphasize, we've had some questions about this. You cannot switch accounting methods in the midst of this reporting. So you can't go from, cash to accrual or accrual back to cash during this reporting to try and take advantage of some of the inherent differences that may apply there. So let me kind of sum up and tell you that that's it for the PPP. We'll be very interested in answering any questions you may have. And also want to mention to you that next week we're going to move to Thursday at 3 p.m. just to give everybody a chance to get out ahead of the long Memorial Day weekend. And next week we're going to come to you with some really good information on cash flow and give you some specific tools on how to deal with challenges in your cash flow. So with that, Marquita, I'm going to turn it back over to you, and we'll open the floor for some questions.
Great, Steve. Thanks so much. A lot of clarity, but we also have quite a few questions. So Sandy asks this question. A banker friend told me there was a discussion around changing the 8-week rule. Have you heard this, or do you have any additional information on that?
Yes. So the Nancy Pelosi brought a new bill to the House of Representatives. My understanding is they're debating and voting on it today. I haven't turned on the news to see how that's gone. But it does include some provisions in this new bill that would change that. And there are several other provisions in that. But keep in mind that those are bills under consideration. So when we go back to the original CARES Act, IBA was fortunate enough to get a copy of the original bill that circulated through the Senate, and that bill was 880 pages long. And then it went over to the House after the Senate passed it, and the House made significant adjustments, and the bill that ended up on President Trump's desk ended up being 330 pages long. So all that reading we'd done on the Senate version turned out to be, somewhat useless because they changed the rules. And I would say keep that in mind for all legislation that's currently being talked about in Capitol Hill. So what we're going to limit ourselves to in these webinars is just bringing you guys the resulting legislation, because until it passes and the president signs it, it really won't come into law and really won't apply to business owners until that point.
Well, I got a question here on the chat side. I've seen something about the date of 5/14 for PPP loans to be returned. What is that all about? That, I believe that dealt with the over the $2 million mark. If you got the money and you didn't think it was right that you should have gotten the money, that's your date to return it. Kind of like get out of jail free card. So yeah. That's about.
And they extended that to 5/18. So that was what we referred to earlier, that they extended from 5/14 to 5/18.
Yeah. Marquita, you got your next question?
Yes, I do. Okay, so Sandy asks another question relating to the using the 75% of your funds for allowed items for forgiveness. And let's say you use 71%, not the full 75% for the qualified items. Then what Sandy has heard is you don't qualify for forgiveness at all. So it's almost as if you have to have 100% allowable items documented, or you lose all forgiveness. You can't go in and get 60% forgiveness and pay 40. You can't go in and get 75% forgiveness and extend the loan on the residual 25. Steve, what are you hearing on that?
So we believe, after reading the law, that that's not the intent of the law, and we've had several discussions with various accounting firms, payroll firms, attorneys, and with the SBA themselves, and we don't believe that that's going to happen. So nothing's in concrete until we see it in the final FAQs and guidance. But we believe that there will be, you may not be applicable to 100% forgiveness. There will be some discount, because if you remember, we talked about there were two ways that your forgiveness could be reduced, right? So if your FTE count went down, or if the amount you paid per employee went down by more than 25%. So there's this reduction provision, but nowhere does it talk about you either use it for 75% or you don't get any forgiveness.
Yeah.
Yeah. So we believe there could be incremental reduction, but you won't lose out on all of it.
Yeah. So Steve, Jana asks a good question here too. And I've heard this quite a bit, and I'm going to embellish her question a bit. She says, how do you deal with other debts or expenses that your business may have incurred that aren't defined under the allowable expenses for PPP? And I've heard lots of small businesses saying, I don't have so much payroll, but I do have other expenses. Is there a program that allows me coverage for those other expenses during this time? Jana, I hope I didn't mischaracterize your question. Steve, why don't you address that?
So yes, there is. I'm going to have Terry talk about the EIDL program. And then there is another program that the Federal Reserve is working on, and I'll come back and give you a quick summary on that as well. It's not out yet, but we expect it to be active in the next couple of weeks as well.
Yeah. So the other program that you're going to really look at, and you can find it by going to SBA.gov, is the injury disaster loan for COVID, and that is issued directly through the SBA. There's a large limit on it. That is a true loan. you will get an advance that is 100% forgivable of $1,000 per employee. Within 8 weeks of filling out that application, you should get contacted by the SBA in applying for the actual loan. That loan is what you should be using to pay your working capital needs and stuff like that. So that is going to turn into a loan with a 30-year amortization rate and an interest rate of around 3.7 or 3.75, something like that. And that has a 1-year deferment versus the 6-month deferment of the PPP plan. So the 8 weeks is a long time to get that. But if you're talking about your business debt and other things like that, we would also recommend that you contact your bank and ask for a 90-day deferment on your payments. I have not heard of somebody getting denied that request. So some of them may only want to defer the principal payment, but most of them that I've heard from are deferring the principal payment and the interest. And I know from talking to one client, it was a simple 1-page document that they filled out, and it's added to it's not forgiven, but it's added to the backside of the loan. So I think this really lays out, make sure you tune in to next week's webinar, because we're going to be talking about a lot of cash flow items like that. So the EIDL loan has been bogged down, which you can imagine from Steve's earlier slide. I did hear from one of my clients that I consulted with today, like on Monday, he got his $10,000 advance because he has more than 10 employees. And on Monday, he received a portal from the SBA via email to fill out the loan paperwork. He signed the papers on Wednesday, and he was funded this morning. So hopefully we'll start to see some things moving on that. On another note, so the phone number, I'll put this in the chat in a second. I called to check up on an SBA EIDL loan. The phone number you need to do that is 800-659-2955. And believe it or not, I got right through this morning, no waiting. They picked up the phone right away. So we'll get into that more. Back to you, Steve.
Excellent. The other program that is coming out is the Federal Reserve is creating what they call the Main Street Lending Platform. And this is another business loan program, which will be, designed specifically for Main Street, small and medium-sized businesses. And we provided some information about that in our last 2 weekly updates. The program is still in the comment period with the Federal Reserve there, and we're expecting that to be released in the very near future. And as soon as it is, we monitor it every day. And as soon as we get information on that, we will share that on upcoming webinars. That program will be delivered by your local bankers as well. So in the interim, you might want to reach out to your local banker and find out, are they going to also be administering what's called the Main Street Lending Program? And bankers do have to apply for that program. So if your bank doesn't know anything about that, stay tuned. We will have a list of banks that are active in that program, and we'll be willing to share that list.
Steve, we had somebody come back on the EIDL. We had 5 employees when we requested it. We received the $5,000. Now we only have 4 employees. Do I owe $1,000 back? Is anyone auditing that loan? I don't know.
It's 100% grant. So there is no repayment on that grant. So what you received was a grant. That advance is a grant.
Back to you, Marquita.
Great. Okay. So Mark asks, if you're not hitting your 75% payroll threshold on your PPP forgiveness, can you bonus a single employee or some other employees if necessary to hit that 75% threshold?
So we have heard various companies say yes and no to this. IBA doesn't really have an opinion on it, and the guidance and the frequently asked questions about this doesn't address this yet. We think it probably will. We do know of several companies that have provided bonus pay for employees that are working during this COVID because they have been in many regards kind of put in harm's way, if you will, to have to work in that environment. And so several companies, and I think Tim even mentioned it last week when he was on the webinar with us as well, that they've done some of that for their employees as well. So for there are bonuses that have been made for employees. We're certainly aware of that, and we think it's certainly within the intent of the PPP, but we'll have to wait and see what the guidance and the rules come out and say regarding whether or not those will be forgivable.
Okay, the next question I see here, and correct me if we've answered this already, Terry and Steve. This is Sandy's question regarding the 25% differential. If the cost reported under the forgiveness are more than 25% higher than the last 2 months, and that would be the last 2 months in 2020. So that would be maybe what, February, March, maybe. If you see a jump in your payroll, is that excluded?
Yeah, that's.
Nah, you answered
So
that, I think.
you could spend up to 100% of your PPP funds on payroll. So
Yeah.
it's what they're asking for is you to spend approximately 75% or 3/4 of your PPP funds on payroll and the balance on the other forgivable items, if you will.
Yeah,
Now,
but and I think Sandy's question probably is a little deeper than that, in that she's asking, let's say we hired people or we gave increases, at this point in time that resulted in our payroll being 25% higher during the 8-week period than it was the prior 8-week period. There's no issue on that, is there?
not that we're aware of.
Okay. Yeah.
Yeah.
Okay, great. Next question. Again, question about the employees who make more than $100,000. Does the greater than 25% cut include employees that make more than $100,000? And Gary's asking that. I'm not sure the context in which that question was asked.
Well, again, you got to remember that the maximum cash compensation that you can report per employee is 100,000. So if you do the math and divide that out, that's that 15,000 figure that we had given you earlier. So no individual employee should receive more than that.
Okay. Now Sandy asks again, and Steve, you and I have had very in-depth conversations about this. On the interest, is it interest before, and she's referring to that forgivable interest on loans you had before the 8-week programs. Is it interest before the 8 weeks of the loan? If yes, dating back how far? If I received the loan on April 14th, would it be interest from February, March, and through April 13th? So there you go.
Yeah, good question. So it is interest during the 8-week covered period of time. Okay, so remember, you're paying the interest during the 8-week covered period of time, which is beginning on the day that you receive the funds. So you cannot cover your past interest expense. So if you paid interest before you received the funds for a period of time before that, you can't use the funds for that. You're using the funds for interest on that portion of your payments that are due during that 8-week period of time in order for it to be forgivable.
Yeah.
And that would go with any expense, that would go with your utilities and rent also.
Yeah.
Correct.
Yeah, and Steve, as you and I have discussed many times in the past, I strongly recommend, support me on this, Steve and Terry, if you agree, that you track these expenses on both what I call an accrual and a cash basis. And that is, when did you incur it? What was the daily interest charge for what days? Is it only the 8 days, or did you make the payment during the 8 weeks? And I really think we need to track both. That's how I'm tracking it, because when we get guidance on this, we need to be able to go back and prove either that I wrote the check during the 8-week period or that the interest accrued during the 8-week period. And I'm doing both.
Yes, and you're exactly right, Marquita. We couldn't underscore that more. So hope that everybody takes that, and if you don't hear anything else, hear what Marquita just said. That's great guidance. We've talked to several payroll companies as well, and if you're using a payroll provider to do your payroll processing, many of them have created PPP reporting specifically for that period of time as well. So they're out, assisting you in that regard now.
Steve, I know I wanted to make this comment from our previous webinar today, because I know we have some bankers and a CDC person on here. There's a petition floating around that anybody can sign to separate the PPP funds from the 7A funds. The significance of that, you know, a lot of you may not understand that, but the bankers and the CDC person will. In the second round of PPP funding, it was tied to the 7A round, 7A, SBA 7A loan. So theoretically, if that runs out of money, there's no money left for regular SBA 7A loans. So the petition is to get that separated again, like it was in round one. So if you're a banker or, you know, from a CDC, if you're not aware of that, please get a hold of us so we can forward that petition to you. And if we get it before, if we get the petition, the link to the petition before we send out our video of our webinar, we'll certainly attach it along.
Yeah, that's a great idea. We should attach that and get that in there.
Yeah. I'm going to jump down to a comment in the chat that Jana made regarding the EIDL that I think we want to make sure we clarify. Jana says it looks like EIDL is only industry specific now. At this time, only agricultural business applications will be accepted due to limitations in funding availability and unprecedented submission of applications already received.
That's true. And so thank you for providing that, Janet. That's true.
Okay. However, people are getting grants through EIDL regardless of industry, right?
That's correct.
That's correct. Okay. So
Yeah,
you can apply, you just may not be
no,
reviewed.
they've limited applications right now to just ag businesses, but it is anticipated that it will open back up again.
Gotcha. Okay. So
right
those
now,
of us who
just
applied
limited it.
before then
Yeah, if you already applied,
managed to slip in. Okay.
You're in the queue. It's coming.
Okay. Okay.
Yeah.
Good clarification. Jana, thanks for that question. Okay. This is an interesting one. Anonymous attendee. Is it true that you must retain your employees for a minimum of 8 weeks after you have used your PPP money for forgiveness as part of the forgiveness?
I've never heard that before.
Never heard that. Yeah. Sean asks, utilities. If my loan started April 1st, am I supposed to use the funds for electrical costs? And again, this is the same question we just answered regarding are the electrical costs for the 8-week period during the loan time are based on when the bill comes and when I pay the bill. So I think we answered that already.
Yes,
Fair?
and I'll also throw in, if you're in the I can only speak about what's in the St. Louis area, but I worked with one of our clients in St. Louis, and we actually called the utility companies, and we got usage, specific usage for specific date ranges for their particular business, and they were we certainly weren't the only ones that were doing that. So at least for the major utility providers in St. Louis, you can call and get a daily usage summary. And they actually emailed it right over to us. We had it literally while we were on the phone with them via email.
Good, good. Okay, Dharmesh asks this question. We had a few employees who didn't return. So we as owners had to fill in extra hours. Can we put that down as overtime?
Yes. But they're limited to the 100,000. So they can't take any more.
Okay. So give me a little more clarification on this, Steve. Must those owners pay themselves through payroll, or can they pay themselves with a draw?
No, they're gonna, I don't know the specific answer to that is the direct answer, but yes, they can pay themselves, or you can bring in temporary employees or hire other employees.
Okay, great. Okay. Sean asks, on the EIDL, we had 5 employees. When we requested it, we received the 5,000 for the EIDL. Now we already answered that. I'm sorry. We answered that already. Since EIDL is a grant, how should I reflect that on my balance sheet?
That's a good question. I was thinking about that.
Yeah, good question.
I think, well, how would that work? I mean, you're going to increase cash, and I guess the other part will go straight to equity because there's no liability to it.
There's no liability, right?
Yeah.
Get my OT chart back out.
Yeah.
It's that CPA training coming out of you again.
Yeah.
Yeah. Yeah, when this is all over, I think we, or at least when we get additional guidance, we'll be good to have a CPA on and talk about how to account for some of this cash flow. I think that'll be a good thing. Okay, that covers all of the questions I have in the Q&A box. There are a few things in chat. Have you been following chat, Terry? Have we covered everything in chat?
Steve, I think we got one more poll, don't we?
Yeah, we do. So we'd like to, if you guys will indulge us for just a minute, I want to launch this poll and ask the participants, what is the most pressing issue that you're faced with in your business today? Is it revolving around cash flow? Is it revolving around sales or the lack thereof? Is it revolving around your profitability or the lack thereof? Is it something to do with your employees? Is it, how do I deal with my bank, or how do I deal with my landlord, or how do I handle financing or refinancing, or how do I deal with my suppliers or my customers? Or if there's anything else that is the most pressing issue with your business in your mind that's not on this list, please put it into either the chat or the Q&A window for us.
I got two quick comments because we are getting close on time, but just for the people listening, the reason that we're doing these polls is we want to keep bringing you relevant information. And everybody's talking about the PPP, probably half as many people that are talking about the EIDL, but there is other things out there like asking your bank to defer 90 days worth of payments, talking to your landlord, on how they may be help you. It's disturbing to me when I hear of a business hurting and not using all the programs that are out there. So we hope to keep these webinars very relevant to the pain that you may be feeling. So that, Marquita, you could probably close us out as soon as we put enough time in for this.
I think we're at 4:01.
Yeah, we'll let this run till the end, but yeah, Marquita, if you want to do a wrap for us.
Okay, well, again, I'd like to thank both of you for as much as we have discussed this PPP loan and other loan products over the course of 6 weeks. I learned something every week as you walk through this, Steve, and I really appreciate what you're doing. I think we're finally beginning to receive some useful guidance on the forgiveness piece of it, and that is good. So I encourage everyone to stay tuned. Join us again next week. Remember that the session is Thursday next week. And with that said, I'm going to turn it over to Steve and Terry for one last comment. Terry, would you like to make a last comment?
Yeah, I think just pertaining to what I just mentioned about, I mean, there's, Steve and I are looking at this stuff every day, and we have a hard time keeping up with it. So as an individual business owner, I can imagine it is tough. So I hope this is useful information, and hopefully we're helping you separate the rumors from the facts.
Okay, Steve, you get the very last word today.
Well, thank you, Marquita, again, and thank you very much for devoting your Friday afternoons to moderating these sessions for us. Yeah, it's unprecedented times we're in, and we are living it as well. We're living it with you guys. So we're certainly small business owners ourselves, and we're very much engaged in this whole program. We've taken advantage at Innovative Business Advisors. We've taken advantage of every one of these programs. So we've got some firsthand knowledge, and we're doing everything we can to tap all of our resources and share that with you guys as well. So we would just ask you, if you find this useful and meaningful, share these links with your friends. Let's get the word out. Obviously, we don't charge anything for this, and we want to provide factual, up-to-date information that's really timely and actionable so that you guys can go out and make a positive difference in your business. It's unprecedented times. Who knows how we're all going to come out of this, but one thing we know for sure is that things are going to be a little bit different, and IBA is going to do everything within our power to bring you every available resource that we can. So we are honored and privileged to have you take time out of your busy days to listen to us. We very much appreciate your presentation, and we look forward to continuing to serve you in the future. So thank you very much for your time, and we hope you all have a very blessed weekend.
Thanks, everyone.
Take care.
Yeah.